Good morning. This is Connor from 0DTE Traders here to present the week ahead for September 15th, 2025. In this video, we'll cover upcoming events, gamma exposure, and volatility for the SPX. Let's dive in. Wall Street's attention this week will largely be centered on the Federal Reserve, who is set to announce its seventh interest rate decision of the year on Wednesday. And unlike the previous six, this one is expected to attract significant market anticipation. After holding rates steady since the end of 2024 following a series of rate cuts, the Fed now faces a cooler labor market alongside persistent inflation, leading many participants to anticipate a resumption of policy easing. As of now, according to the CME FedWatch tool, there's a 96% probability of a 25 basis point rate cut. Now, beyond the Fed, the economic spotlight will also be on this week's retail sales due out Tuesday and housing data due out Wednesday. On the economic front, the earnings front, a global economic bellwether FedEx is set to report its results. To start the week, the Gamma Index, which tracks dealer gamma exposure, is near peak gamma, 980 million notional, trading above both transition levels 64.95 volatility flip and 64.95 zero gamma. This is our risk on, risk off transition. As you can see, most strikes above positive, that is supportive for the market price. Most strikes below negative, that is destabilizing for the market price. As of now, the backdrop does remain supportive as dealers buy weakness and sell strength. However, there is little gamma to fuel upside at this juncture. In other words, we're at peak gamma, which is essentially our call wall and upper bound. For the SPX, that shows at 6,600. For the SPY, at 660. So that puts a upper bound zone of 6,600 to 6,610 SPX. Now, there is potential to see this call wall shift higher, and that would be our cue for more upside. Potential call wall candidates include 6,650 and 6,700. The trend remains up from the September low. So we put the low in here, higher low, higher low, higher low, higher low, and another higher low here on Friday. So potential, I would say, secondary transition is 65.80. This is the SPY flip. Quite the variance here from the SPX flip, and we most certainly give more weight to SPX metrics. However, 65.80, 65.75 could be a change of the short-term trend. Additionally, below 65.75 to about 65.05, which is the JP Morgan short call strike expiring at the end of the month, is a very mixed gamma zone. So we got some strikes positive, some strikes negative, which generally leads to more of a chop kind of whipsaw type environment. So if that 65.75 gives way, we could see a little bit more downside, a little bit more volatility. Now, in regards to volatility, vol dynamics remain unchanged. Options continue to price in low volatility, 1.45% for the week, 0.7% for FOMC, with the VIX at the lower bound of 15. Anything below 15 is considered oversold from an options positioning perspective. Now, just because vol is oversold at the lower bound does not imply it's going to move higher. Volatility can sustain low levels for an extended period of time while SPX moves higher or sideways. So this is not a timing indicator, just an indication on where the risk lies at this juncture, and it is most certainly towards the left tail. So in other words, further volatility compression at this juncture will do little to support upside, right? There's just nowhere to go. Conversely, a rebound in volatility will exacerbate any downside as options get repriced higher. Okay, now generally to see a rebound in volatility, you need a negative catalyst, but it could happen for technical reasons, oftentimes around option expiration, which we have here this week. So VIX OPEX is on Wednesday, last trading day on Tuesday. So a lot of the sell flows that have been suppressing volatility this cycle will be removed from the market, essentially unpinning volatility, and there is a decent potential for a volatility spike this week. Now, two potential scenarios. Should volatility push higher to start the week, right, and we get a bit of a pullback Monday, Tuesday, it could set the stage for a squeeze rally later in the week if Powell strikes the right tone. Now, it is going to be dependent on Powell because 25 basis point rate cut is already consensus. This is already priced into markets. What participants are going to be paying attention to is the future outlook for monetary policy. So once again, dependent on Powell. Conversely here, the wrong tone could send volatility sharply higher, SPX lower, and catch a lot of positioning offside. So I think the main takeaway here is the market is very complacent with no one pricing in risk this week. If you'd like to learn 3 option strategies that our traders use to generate consistent profits with 0DTE options, along with a repeatable process on how to trade these strategies effectively, join the team at 0DTEtraders.com.